have the check here in the business. It is April 19th or 18th, whatever the date is, right? I have the check in the business, and because of this COVID-19, I decided, I'm going to stay home a few more weeks until it calms down before I go back to the bank. Right? When so in my cash book, I will record that, okay, Mr. Sharpner paid me $5,000. In my cash book, I will record that. So therefore, my bank account will be a little bit higher in the cash book than in the bank itself, because I have $5,000 in check which I did not deposit. That is recorded on the cash book. But guess what? It is not deposited into the bank as yet. So the bank doesn't have that $5,000. So hence why they call it bank lodgement not yet credited, because it's a check that's supposed to go to the bank and it's not yet credited. No, the bank is the opposite of the cash book. Now, in the cash book, the pay in side is the debit side, but but inside of the bank, the credit side is the money going inside in the bank, in the bank, right? The debit side, on the other hand, is the withdrawal side. So the credit side in the bank is the deposit side. You put in the money. And the credit side and the debit side, in the bank is the withdrawal side. You're taking out money. Right? You're taking out the money there. So, yeah. So this is the first two things you look for on the in. This is the first thing you look for in the cash book. Bank lodgement and the unpresented check. Right? Both of them are checks. Alright, sorry about that, the phone rang. But anyways, as I was saying, the are items on the bank statement that we will not see on the cash book. That's because they're directly related to the cash book. The first one we pointed out was bank charges, and we have bank interest, might be on a loan, and they might be charging you that. We have direct debits, we have standing orders, and we have bank gyro credit, also known as credit transfers. Now, what are these things? That's the big question you have. What are they? What are they? Right? Now, bank charges, I already explained that. Direct debits. Direct debits. Now, if you look at page 229 in your Principles of Accounts text, they have a little glossary for all the bank terms. Right? Now, it states that a direct debit is where business gives permission for an organization to collect amounts owing direct from their bank. Right? So we established that the debit side in the bank account is known as the payout side, and the credit side is known as the money coming inside. Right? So, direct debits. Let me explain what direct debit is, right? Now, a direct debit, according to the text, is when you give businesses permission to take out what they want from your bank account. You give them permission. So let's say, for instance, you owe them. So you say, all right, I'm not in the country, so you could go to the bank and you could withdraw those payments that I owe to you. right? So those are direct debit. And remember, direct debit. Pay attention to the name, direct debit. So therefore, direct debit will be on the debit side of the bank statement. And the debit side on the bank statement is what? The paying out side of the bank. Right? Remember, we established that the bank account and the cash book differ. What is the paying side for the cash book? Which is the debit side for the cash book. The paying side for the bank account is the credit side. Right? So the direct debit has to be money going out of your bank account. So you give businesses permission to access your bank account to take out what you owe them. Right. The next item we will see is known as a standing order. Now this is similar to the previous one, but the only difference is the person who you give the permission to. Now this one you might have a little more control. Right. This one you have a set fixed amount that will come out monthly. Right? So the book states, instructions given by the business, my business, be the business right now, managing your own shop. Instruction given by the business to a bank to pay specified amounts on a given date. So, for instance, let's say electric bill is a monthly bill of $100. Let's say telephone bill is $60. Let's say water bill is $60. Right? Those are the fixed amount. We pay them fixed every month. Now, I could go to my bank of SVG, and say, I need a standing order. Right? I need you to do a standing order for me. Every month, I want you to pay these utility companies, because me, personally, in get time for leave where I live, go to the city and make those payments. So I need you to make those payments for me. And so I'll give the bank the amount, right? Bam, 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 100. So basically, I give them the amount to pay out to these business. Right? That is a standing order. We give the permission to the bank to pay out to these other accounts of these other businesses. Right? Now that will come with a fee. And all that will be in the bank charges. Right? Next item. Bank Gyro Credit, also known as credit transfer. Right, I feel I'm missing something. Talk about direct debits. Anyways, bank gyro credit transfer. According to the textbook, it's a method used by a business to pay creditors wages and salaries. Right? So I believe our employers normally will use this method. Right? Because I don't go to town for a check when I get paid on a monthly basis. I don't. The money goes straight into my bank account. I have no time to go to town and collect a check. And I don't have no time to go to town to go in the bank and line up with a bunch of people to deposit that check. Right? I needed to go directly in the bank. Right? So we have bank gyro credit transfer. Method used to business to pay creditors wages and salaries. Right? Credit transfer. You see this in movies all the time. Bank gyro credit. So transferring money from one business account to another business account, one business account to a personal account. Right. Now, I think I'm missing something. Because guess what? There's something called a direct deposit. Right? Now, a direct deposit is where someone directly deposit money into your bank account. right? Now the thing about bank accounts, right? Only you can withdraw money from your bank account unless you give somebody else permission and you present ID card and support and you have to work on a letter, right? But only you could withdraw money from your bank account. But many people could deposit money into your bank account once you know your bank account number. So there's something called direct deposits. Now, for instance, I might be, let's say I'm overseas, I'm working overseas, and I'm renting my home, right? Somebody pays me rent. Now, the fact that I'm overseas, I cannot be going to collect the money for the rent. So I tell the person, on a monthly basis, just deposit the money into my bank account, right? Give them my bank account, and on a monthly basis, they will go to the bank and deposit the money. So that is called a direct deposit, right? So the customer will be directly depositing whatever they owe me into the bank account on a monthly basis. Customer or the debtor, which is the same customer, or whosoever is paying me the money, right? Whosoever is paying me the money, whether they pay me back a refund, they could do it directly by depositing it into my account. Like for instance, when you give me the refund, you will directly deposit the money into my account in St. Louis and the Grenadines. So we have bank deposits directly.